Everybody, what is going on? Oh my gosh, things are going to change a lot in the next 2 weeks. That's what it looks like. Coming at you with a breaking update. We just got the numbers, and yesterday you told me, get ready, Oscar, because they're coming in less than 24 hours, and now we're seeing it. Jobs report, the BLS just published the numbers. 75,000 expected for the month of August. Actual 22,000. And everybody's panicking right now, but you know what's crazier? That now a 50 basis point cut of the federal funds rate is now on the table. So forget about hike, forget about pause. I want to show you this. We'll play this 47-second video here on X, but take a look at this. First time that I see this, because it was always a pause or a 25 basis point, a pause and a 25. Check this out. We have 425, 450. At 0% now. So it's not happening. But now they're considering here on the CME a 12% chance for at 375, 400, which will be a 50 basis point cut. We do that, fam. We are supposed to do very well. And right now, I'll show you BTCC here on XRP. The prices are reacting. I think people are saying, oh boy, I mean, things can get a little spicy. So, poly market right now, the 50 basis point decrease now went up by 5%. No change, came down 3%. Hike, not even question that it's going to happen. Hike cannot happen. You do hike, it's cooked. So you can't make this up, says the letter. Last month, the May and June reports were revised lower by 258,000 jobs. Today, the BLS revised the June report lower again by another 25,000 jobs. That's a total of 285,000 jobs minus, right, in 2 months. So 22,000 jobs added in August. Unemployment rises to 4.3%. Broader jobless rate jumps to 8.1%, slowest 4-month growth since 2020, plus downward revisions for June and July. Tough. So another terrible jobs report for Trump. The U.S. economy added just 22,000 jobs, expected 75,000. So things are obviously moving. Listen to this, everybody. And don't forget to drop a like, fam. Consider subscribing to the channel and turn on those notification bells.
Yep, I sure do. 22,000 jobs added in the month of August. That was much less than the expectation of 75,000, guys. The July number was revised. I will get to revisions in a moment. Unemployment rate coming in as expected, 4.3%. So that would be higher than July's 4.2%. Again, 22,000 jobs added in August. Let me get you the revisions because this is what everybody is focused on. For June and July together, combined 21,000 jobs lower than previously reported. I'll categorize that now. So you see for June, it was revised down by 27,000, getting you to negative 13,000, and the change for July up by 6,000, getting you to 79,000.
Go through them, Lauren.
Yep, I sure do. 22.
So yeah, that's what people are saying, that, hey, what's going on, right? What is actually going on?
We do have the data, and it is not good. 22,000 jobs created during the month of August. That is significantly lower than the 75,000 anticipated. Last month, 73,000 revised up to 79,000. Change in private payrolls, 38,000. Last month, it was 83,000. The 2-month net payroll revision is another negative 21,000. We'll have to look and see what the breakdown on that is. But the unemployment rate, which is the thing the Fed is watching, moves to 4.3% from 4.2%.
Who is watching? The Fed. Stable prices and a good labor market. They're going to cut. They have to cut. There's no other. There's just nothing else for the Fed to do than cut. They do have to do it.
Labor force participation rate ticks up to 62.3%. Manufacturing payrolls down 12,000. We did expect that given what we saw with the ISM numbers. So at this point, there's nothing surprising except the weakness in these numbers. Average hourly earnings up 0.3 as forecast, but only up 3.7% on a year-over-year basis. So The non-farm payrolls, okay, I'm just looking to see some revisions popped up late here, but there's nothing more beyond what I told you. 22,000 jobs created, another 21,000 taken away from the prior 2 months of June and July. I'll get you more details, and it doesn't look like the markets are happy about this.
So everybody, let me know in the comments below what you guys think. I want to remind you that this is the time sometimes to go against the grain. If you want to wait a little bit, that's fine. But what I like to do is buy the dip, buy the floor, buy the FUD. Click the first link down below, everybody, and join me on BTCC. If you want to sign up and get bonuses, just put your email, your password, and guess my code and start trading, fam. They've been in business for so many years, 14 years now. Up to 10,000 welcome bonus. Not only that, you like XRP, all you have to do is trade, and you're going to get a chance to the 2,000 XRP giveaway for August. We got a winner, and here it is, my first winner. So, like I said, I reached out to this person, and we're waiting still, but it's good, and I'm very happy for that. Now, there's obviously all kinds of reactions to this, and, well, here's another one 2 hours ago, right? Lower tariffs in Japan. The jobs report is coming out. There has been weakness in the labor market. What do you see? Lightning Donald Trump's economy just beginning. I think it's important to note, right, that we are waiting for that cut to change things, right? Because we haven't had a cut in the entire year of 2025. So that's obviously disappointing, right? Let's take a look at this.
Here, private payrolls coming in. The expectation was 75,000. We got 38,000, and there was a loss of 16,000 jobs in government, which I think Lauren mentioned. But again, you know, that 22,000 number, Charles, it's a weaker than expected number, and these revisions are pretty brutal.
Yeah, extraordinarily. You know, gone through. I mentioned healthcare, 31,000. The 12-month average is 42,000. That had been obviously a massive driver, and we know the demographic situation there. Just a little disappointed. Manufacturing was hoping to maybe see something there. But it's just, I think for the most part, if there was a whisper number, and I'm sure there was, this might be right where the whisper number is. And this is a sweet spot, I think, from the market's perspective. You can see the major averages are moving higher. It's not so bad that we're thinking recession, but it's bad enough that we think maybe the Fed could be much more accommodative beyond September.
Yeah.
There you go again. It's not Oscar Ramos and nobody's saying it. It's experts. The Fed could be more accommodating to everything. I've been watching this guy, Jerome Powell, for the last 2 years. The last FOMC under Biden, he cuts. And everything throughout Trump, nothing. Only till we have these issues with the BLS and, you know, well, not BLS because they do the reporting, but just the jobs in general, right? That's when everybody starts saying, come on, man. It's been tough. It's been tough, of course. I am just watching the charts, of course, here with BTCC at 281. Actually, just a couple minutes ago. Look at this. Look at that candle. That is a killer candle. That is a killer candle if I haven't seen one. Somebody is saying, let me go ahead and chop some. I mean, it's brutal, right? Now, there's some comments by the SEC and the CFTC, you know, or work of cooperation, which is nice. Not sure if it's about crypto, but, you know, they want to work together, which is good. Let's continue doing our little digging. Weak jobs report. Another terrible report. Obviously, people are going to be blaming Trump or his policies, right? That's when you are the president, you get to have a little bit of the blame or all the blame. Depends. But there it is. There it is. I was waiting for this. You're still watching. Welcome. Here it is. Jerome, too late. Powell should have lower rates long ago. As usual, he's too late. There it is. Meaning, Jerome, When are you gonna do this, Jerome? Please. Where was it? Here. Obviously, right? So it's tough. It's tough. Everybody's talking about this. Everybody's talking about what he's gonna do, and I'll tell you something, guys. Exactly, these are the times when you want to be very bullish. But Oscar, doesn't make any sense. Everybody's selling or people are freaking out. Exactly. Exactly. So it's not the end of the world. It's going to be fine. A few more weeks, a few more days, and we're going to get that FOMC and we're going to watch it together. But I'm so ready. Thanks for watching, everybody. Drop a like, subscribe to the channel. This is what's going on, the latest, the news. Stay tuned. Peace.